everyone, it's Karen Roberts from the Emerald Financial Group. It's time for Take a Minute Thursday. I hope you've been enjoying this series of educational videos, and I hope you're learning lots from it. If you've missed a video and you want to go backwards, please visit our website, emerald-financialgroup.com. There is a video tab. Drop down, you'll see all the videos there. So for the last couple of weeks, we've been talking mutual funds, and today I want to talk ETF. What in the heck is an ETF? ETF stands for Exchange Traded Fund. What the heck is an exchange traded fund? So an ETF is very similar to a mutual fund in that it holds a whole bunch of stocks in the fund. But it's different because it's traded on the exchange, more like a stock. A mutual fund is traded at the end of day close, where an ETF can be traded at any point in time throughout the day. An ETF, again, has a whole collection of stocks, but it tracks an index. So if you own the S&P 500 index, then you would own all 500 shares of the S&P 500 in your ETF. If you own, now ETFs can really dive deep, so if you only want women-owned companies on the S&P 500 or minority-owned companies, then you can find an ETF that only holds those stocks. So again, more efficient than holding individual stocks, but more precise as to what you want to hold, as long as someone out there has created it. Unlike a mutual fund where a manager really picks and chooses by what company he thinks or she thinks that they should buy. What else about an ETF? The ETF prices fluctuate throughout the day because, again, it's bought and sold like a stock, where a mutual fund is consistent and is repriced at the end of the day. So in a volatile market, an ETF may be a better way to go because you can buy on the ups and the downs. Although, we really don't want our clients buying on the ups and the downs. We really want our client consistent and in it for the long term. So really, what's better for you, an ETF or a mutual fund? ETFs tend to be a little less expensive than mutual funds. They're more passive versus a mutual fund being more active, meaning a mutual fund you trade a lot more, and an ETF you don't trade inside as much. So an ETF may be more tax efficient. But really, what's better for you? It depends upon what you're trying to accomplish and what kind of money you have and how your money is diversified and who you are. So, I don't know. That's why we here at the Emerald Financial Group do financial planning. So we can answer all those questions up front, so when we make a recommendation for you, it's for you. So that's it for this edition of Take a Minute Thursday. Starting next week, we're going to talk annuities, the good, the bad, and the fantastic. Please join us. And again, if you want to contact us, emerald-financialgroup.com. Direct message us on Facebook. We'll be more than happy to talk to you, or shoot us a text at 954-840-8334. Have a great weekend, everyone. Talk to you next week.